You just opened an LLC, and now you are panicking about taxes. Here's the thing, every video you watch, every article you read, they're all talking to US residents. Nobody's explaining what happens when a foreigner owns a US company, and getting this wrong means either paying taxes you don't owe or getting hit with $25,000 penalties. But what if the answer is actually zero? What if there's a completely legal way for non-residents to pay absolutely nothing to the IRS while running a US company? Well, there is, but only if you understand exactly how to qualify it. 1. Why your LLC is invisible. To understand why you might owe zero tax, you first need to know what makes an LLC completely different from any other business structure. And why listen to me? I'm Arjun, founder and CEO of Doola, a Y Combinator-backed startup in New York City that's raised over $13 million. We've helped over 15,000 founders from over 175 countries start a US business. See, when Amazon makes profit, Amazon pays corporate tax. But when your LLC makes profit, something weird happens. The LLC doesn't pay anything. It's called a disregarded entity. The IRS, the Internal Revenue Service, literally pretends it doesn't exist. All the profit automatically flows through to you, the owner. If two people own it, it becomes a partnership. But still, the LLC itself never pays the tax. So here's the breakthrough. Since the LLC is transparent and you are the one who would owe tax, the only question that matters is, can the US tax you? And if you're not a US citizen or resident, the answer might be no. 2. The magic test that saves you everything. Now, being a non-resident isn't enough by itself. There's one specific test in Code Section 864C that determines everything. It's called Effectively Connected Income, or ECI. The IRS is basically asking, are you actually doing business in the United States, not through a US company, but physically in the US? Are you flying here for client meetings? Do you have employees on US soil making decisions for your business? Do you have an office in New York? Even one employee with power to sign contracts could trigger this and make you owe full US taxes. But here's the beautiful part. If you're sitting in Dubai, Barcelona, or Bangkok, running everything remotely with no US office, no US employees, maybe just some independent contractors who can't sign contracts for you, you have zero effectively connected income. The tax code literally says performing services outside the US is not US sourced income. Zero ECI equals zero tax. 3. The hidden benefit worth more than the tax savings. Okay, so you qualify for zero tax, but here's what most people don't realize. The tax savings might not even be the biggest benefit of the structure. Business owners report losing 30% of sales when processing payments through companies in Thailand, Nigeria, or even Dubai. Credit cards can see these as high risk and auto decline. Customers see a foreign company name and hesitate. One entrepreneur switched from a UAE company to US LLC and watched his payment decline rate drop from 30% to almost nothing. Think about it. US banking infrastructure, Stripe acceptance, instant customer trust. Western customers don't think twice about buying from a US company. You are literally buying credibility and conversion rates while still paying zero US tax if you don't have effectively connected income. For many businesses, this increased revenue dwarfs any tax savings. Now, setting the structure up correctly from day one is critical. Services like Doola handle the EIN, registered agent, and most importantly, will make sure those mandatory forms get filed every year. Plus, you get a CPA consultation to structure everything properly for your specific situation. There's a link below if you want to check out how we can help you handle LLC compliance, which we've done for thousands of international entrepreneurs. You can book a free demo today. Now, let's get into taxes. The $25,000 paperwork trap. Here's where people absolutely destroy themselves. They think zero tax means zero paperwork. You must file Form 5472 and Form 1120 every single year. Doesn't matter if you made $0, doesn't matter if you owe zero tax. Miss these forms, that's a $25,000 penalty. That's $25,000 in fines for paperwork that just says, hey, IRS, this business exists but owes you nothing. And with information exchange agreements between countries, they can and will find out. The good news, with professional help, filing takes maybe an hour per year. But there's another compliance issue, sales tax. If you're selling physical products to US customers, you might need to collect sales tax based on where they live. That's completely separate from income tax and applies whether you're foreign or not. And by the way, if you want help with Form 5472 filings, Doola specializes in it. Again, you can click the link below. We're happy to take this off your plate. 5. The 30% tax bomb nobody warns you about. Even if you qualify for zero tax on your business income, there's a sneaky category of income that gets hit with 30% withholding automatically. It's called FDAP income. Got a YouTube channel? YouTube withholds 30% on revenue from US viewers. Selling books on Amazon, 30% on US sales. Own US stocks, 30% on dividends. This happens the moment you file a W-8 Ben form as a foreign person. Even with your tax-free LLC, these specific income types get crushed. But CPAs know the workarounds. You can add a trusted partner with 1% ownership to make it a multi-member, then file W-9 instead of W-8 Ben, or elect corporate status with Form 8832 and expense out the profits, or restructure royalties as commissions. Strategies can help reduce or potentially eliminate the 30% withholding. 6. The reality check about your home country. Before you celebrate your tax-free US LLC, there's one brutal truth about where this all falls apart. The US not taxing your LLC doesn't mean nobody taxes it. If you're sitting in France, Germany, or Canada running this LLC, your home country sees right through it. They don't care where it's registered. They care where it's managed. They'll tax it like a local business. Some people think they're clever, setting up a US LLC from their high tax country, then get shocked when their local tax authority sends them a bill. This structure only makes sense in 3 scenarios. You live in a zero tax country like UAE, you're in a territorial tax system, or you accept paying your home country taxes but need the US banking and payment benefits anyway. The perfect setup? Living in Dubai with a UAE holding company that owns your US LLC. Zero tax at both levels, but all the US infrastructure benefits. So now you know how non-residents can pay 0 US federal tax with their LLC. But here's something crucial. Not all states treat non-resident LLCs the same way. Wyoming has become the go-to state for non-residents for one specific reason that saves thousands in taxes and fees that states like California would charge you even as a foreign owner. Watch this video right here to discover why Wyoming is the ultimate state for non-resident LLCs, including the exact tax advantages, the annual fees compared to other states, and the one Wyoming-specific rule that protects your assets in ways other states simply can't. Watch this video next.